People are sold whole life or universal policies that they literally don't understand whatsoever. $200 a month thinking it's an investment, when in reality it's a low return savings account with a death clause. And the cash value takes like 10 plus years before you even break even. And if you cancel it, you lose all the money you've spent so far. If you die late, good luck collecting that payment with all the fine print in it. If you actually want to protect your family, here's what to do. Buy term life insurance, which is cheap, simple, and not any BS. Then take the money you've saved and put it in real estate, or actually just get in a career like tech sales where you can make 200, 300K a year your third year and invest that money into the market or real estate. You're a lot better off building wealth when you're alive versus when some insurance company wants you to die. So if you're in life insurance, please disagree with me or argue with me, but I highly advise switching to tech sales. Selling life insurance, please.
Let's shoot bullet holes all through this, shall we? First off, does our agency offer universal life, whole life, permanent insurance policies? Absolutely. Does our agency offer term and time restrained, limited time insurance policies? Absolutely. One is not better than the other. They both serve their own purpose, but it's no cookie cutter type plan. It depends on the goals, the situation, the individual, and what needs to be accomplished with that policy to decide if that can be safely done through term or if it needs to be done through a permanent policy, such as with legacy planning, and or if you want to use it to supplement retirement. You should not use a life insurance policy as your only means of growing wealth or saving for retirement. But I would be remiss if I did not let you know that we have many affluent individuals that life insurance is a huge portion of some of their income stream that they're planning on in retirement. So he kept referring to it as being the same as a savings account. Yeah, that's not accurate, especially not if structured properly. Savings account would mean that you're basically just getting all of your money back. You've saved it, not used it. Most all of your whole life products have a fixed interest bearing component to them. So you know year after year what they're going to make you in interest. He referred to not getting your money back and breaking even until a 10-year period. Well, that's because you have to front load these policies. They are not anything that's going to take place overnight. It is long term, not quick turnaround. So you spend the first 10 years front loading those policies with premiums that are going to stay level for the rest of your life. And you gain what's called a cash value component. So not a savings account, but there's a column inside of your policy referred to as cash value, which is equity and accumulation that you're building inside that policy. Now, the universal life and index universal life, those can use market gains in order to grow your policy. So instead of having a fixed component to it, you can have a floor so that you safely retain and don't lose money when the market is down, but get the growth when the market is up. This can end up making a much larger accumulation and net worth style policy, getting help from the market. Neither carry risk. Both, if structured properly, are permanent insurance policies. These can be used to create income streams in retirement and not have to worry about things such as volatility in the market from other investment vehicles. I don't want to get into commissions or real estate. That's not what we're here to do. But all those things carry risk. A permanent life insurance policy that's structured properly cannot even be referred to as an investment. And the reason is because it carries zero risk. The last thing that he wanted to make mention of is that if you end up canceling the policy, you lose all your money you put into it. Again, incorrect. You get all of the cash value back if you cancel that policy. There may be less cash value than premiums you've put in if you cancel it too early within that first 10-year period, for example. But you do not lose all the money you've put in that policy. You get all of the cash value that's accumulated minus any surrender charges for any early cancellations. So you are still liquid. Not to say that canceling would be the smartest thing to do. There's many other things that we would advise, such as moving that money into another product that would put more money into your pocket instead of canceling this, or to do systematic withdrawals for money that you need to keep your death benefit and your policy intact, not to mention the tax advantages of not paying taxes on that money right then. But you can also borrow that money from your policy, which also keeps you from having to pay taxes on it and keeps that death benefit intact. And that's money that you don't ever have to pay your policy back. And it would just be minus that money from the death benefit when you did pass away. So this is great for legacy planning. It's good for premature planning. There's many options that come available with this. But don't be fooled by inaccuracies. Work with an agency and an agent that know this stuff instead of just what they've heard through the grapevine and can explain it with fine print and numbers and data instead of just a video that you found. The thing that I would want to make mention of is just how important it is to use a reputable company and a reputable agency to represent you and to handle structuring this policy for you and setting up the beneficiaries properly. Because this young man also made mention of what it's like trying to get your money uh, through means of a death claim if something premature happens. The number one reason to have a life insurance policy is because if something unexpected happens to you and your income is gone, your family's finances are going to be turned upside down unless they magically have all that money that they need again at that exact moment. That's the magic of life insurance. That's the number one purpose of life insurance. All these other components are just levers to pull to help make it a even more valuable financial Swiss Army knife. But if you work with a reputable company, a reputable agency, I can speak for our agency and tell you that once we have a death certificate from the family, we have a check in hand for the life insurance portion in 2 days. And we will hand that check to you in person. No mailing, no filling out paperwork, none of the 1-800 numbers or websites, no being transferred from here to there. It happens personally from our agency, from our hand to yours.